And it's time to take a look at what the markets are saying at intraday. Coming up in the next 25 minutes. Cooking gas prices in Kenya rise to levels before VAT removal. Ethiopia set to join Zambia and Ghana as sovereign defaulters, with an interest payment falling due to its bondholders today. And gold prices slip, pressured by a firm US dollar. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at how your money is performing at intraday, starting on the African continent with major markets that we track. We see the Nigerian NGX there, 0.13% up at intraday, while South Africa's index on the flip side, that's in the red at 73,701 points. Other markets we track in North Africa, so see the EGX 30 also up 0.19%, but Kenya closed up in the green on Friday, about 0.01%. So we're seeing it's mostly green right there in Egypt and Kenya. Looking out for the close in Kenya today. Let's take it on to the Middle East now. We'll see Middle Eastern markets are mostly negative. In the UAE, the Abu Dhabi index and the Dubai index there, we see it's 0.06% marginally up, and 0.39% for Dubai down. And elsewhere, other markets we track there in the Middle East, Saudi Arabia and Qatar, the Qatari index, also we see the Saudi index up 0.72%, while the Qatari index down 0.43% at intraday. Let's get a check on what's happening in London now. Juliana joins us from our London studio. Great to have you, Juliana. So you spoke to Ini earlier about Rishi Sunak's COVID inquiry. What's the update?
Yeah, that's absolutely right. Good afternoon, Laddie. Today is the day where Prime Minister Rishi Sunak gets his COVID-19 inquiry grilling. He's been sitting in the hot seat for a couple of hours now. I think just a few minutes ago they broke for lunch, but this is part of a broader investigation, basically trying to ascertain why exactly Britain had one of the worst COVID death rates in the world. In fact, I believe over 250,000 people lost their lives during COVID-19. So this probe is to try and find out what went wrong and what measures need to be put in place. So if there is another pandemic, we can do much better. Last week was the turn of former Prime Minister Boris Johnson. Today is Rishi Sunak. And it's really all about Eat Out to Help Out, which was a very popular scheme in the summer of July 2020. I think Brits were desperate to get out of their homes because, of course, we had been locked down since March. Rishi Sunak at the time was the Chancellor, and as well as being famous for the retention scheme or the furlough scheme, where basically people were paid to stay at home, another one of his legacies from that period is Eat Out to Help Out. And unfortunately for him, we've seen from testimonies given during this inquiry that perhaps Eat Out to Help Out fueled the virus, and that's going to be a major issue. So he is going through a series of pretty difficult questions at the moment. Anybody who watches or follows the character traits of Prime Minister Rishi Sunak, you will know that he is pretty good when he's under pressure. He is incredibly smart, always on top of his brief, but this is going to be a big political week for him. He's got that Rwanda vote tomorrow, where there are some suggestions saying that if he loses that vote on fast tracking legislation, then perhaps he could be out by the end of the week. And I don't think it bears well for him that today bereaved family members are having to hear some really painful times and periods, and the fact that he's been described as Dr. Death by some ministers that worked for him at the time. So yeah, big week, and it's a big day because, of course, 250,000 deaths from COVID is no joke. I think most people in this country know somebody who lost their lives, and he was right in the middle of the decision-making team. So let's see how that plays out by the end of the day.
Yeah, definitely a big week for Prime Minister Rishi Sunak, and we'll definitely be tracking all of that here and that developing story. But let's look at other matters now. See, Microsoft's multi-billion-dollar partnership with ChatGPT make OpenAI could face investigation by UK's competition regulator. What are you hearing about this? I guess it's all about allowing healthy competition.
Yeah, that's absolutely right. That's what the Competition and Markets Authority are there to do. They're there to make sure that consumers benefit from there being healthy competition in the market, particularly when it comes to artificial intelligence. We know that world leaders are taking it incredibly seriously. I think, the event that they had, the summit that they had in Bletchley Park just a couple of weeks ago, affirms the fact that, this is an unrivaled in economic history. So I think there have been several things that have happened in the past couple of weeks that have made the CMA look much closer into, as you said, Microsoft's alleged partnership, £13 billion partnership with OpenAI. Now, the reason why this is coming to the fore is because of the hiring and then mass rapid rehiring of OpenAI's CEO, Sam Altman, and when he was fired by board members, within hours, Microsoft allegedly offered him a job and said, bring your whole team, we'll have you in. That raised some suspicion amongst the CMA because they just wanted to know just exactly what kind of power Microsoft have over OpenAI. And this is the second time that the Competition and Markets Authority are looking into Microsoft and its dominance of big tech. It did that earlier this year with the computer games, the Call of Duty merger. But now they're looking at the relationship between Microsoft and OpenAI to say whether or not it is a partnership or if there's been some M&A by stealth. So they just want to reiterate and confirm some of those issues. I believe at the moment, this is very much in the early stages. It's the first phase of a potential probe. So what the CMA are doing now is they're just going to various stakeholders and they're asking for their comments to see whether or not it is investigating further. Now, of course, Microsoft not happy about this. They feel they're being unnecessarily targeted by the UK and, to be fair, the European Union, because they've really started to hammer home just how dangerous it can be for big tech to try and dominate everything. And they said that, look, Microsoft's partnership with OpenAI has fostered more AI innovation and competition, but just how much so is that, considering that AI now is, the future? They just want to make sure that all the I's are dotted and the T's are crossed.
Making sure all the I's are dotted. And I'm a big fan of Call of Duty, and I'm hoping it comes to the Nintendo Switch soon. But how are the markets looking in the UK?
Unlikely. Not great, actually. We did have some forecasting from the CBI, which is an embattled British business lobby group, but they do have still some influence, and they have suggested that the Bank of England are not going to be able to reduce interest rates until 2025, which has really rattled the markets at intraday. So it's down. The blue chip index by 0.45%. The FTSE 100 is down by 0.60%. And the FTSE 250, that domestic market, laddie, is down by 0.46%. In the currencies market, the British pound is currently trading up against the US dollar by 0.19%, up to against the euro by 0.11%, and up against the Japanese yen by triple-digit figures, 1.04% at intraday.
All right, thank you so much, Juliana. Always great having your update. Thank you.
Yeah, thanks, Lev.
All right, let's take it on now. See, in South America, the conflict between Venezuela and neighboring Guyana is intensifying, and many global leaders have warned of a war in the region. Lars Holter, as with DW, joins us now from Berlin. Great to have you, Lars. So Berlin has been following developments there in South America, which are actually carefully followed by leaders in Europe at this point. Talk to us about what to expect. What's the latest in the conflict?
Yeah, thanks for having me, Ladi. Well, after a tense few days, I think there is at least some good news. Venezuela and Guyana have agreed to a high-level meeting to be held later this week. It is to discuss the status of the disputed Essequibo region. Now, let me give you some background here. Guyana, of course, is Venezuela's neighbor to the east, and Guyana is split lengthwise by the Essequibo River. About a third of the country is to the east of the river, and about two-thirds are to the west. And that part is also the Essequibo region, named after the river. And even though that land has been part of Guyana ever since 1899, Venezuela claims it actually belongs within its borders, and it has threatened to annex it. There's one reason for all that: huge oil reserves that have been found there. Now, Venezuela did have that region actually, then went to Guyana under British colonial rule, so there is a lot of complicated history there. But as it stands, for more than a century now, Essequibo has been part of Guyana. It's internationally accepted that way, and no one expects the International Court of Justice in The Hague to rule otherwise. They're actually looking into that right now. In the meantime, at least we're not expecting a military offensive. So mostly, of course, because of the immense oil reserves discovered there. That was back in 2015. And it's not just any kind of oil. It's light, sweet crude. It has very low levels of sulfur. It's very easy to refine. It is pretty much the best crude out there. It's very lucrative. ExxonMobil is already involved in getting it out of the ground. But of course, everyone wants a piece of the pie now, and especially Venezuela. Now, that country's president, Nicolas Maduro, said he wanted to annex the region and start drilling, and that's where we are right now, with that threat hanging in the air. A dispute like this, of course, brings in all kinds of partners, and now this has really blown up. Guyana is supported by the US and also by the EU, but Venezuela, clearly on the wrong side of the issue by any international legal standards, also has its supporters, Russia and China chief among them. Russia, that also annexed Crimea, by the way, almost 10 years ago, has very close ties to Venezuela, including trade, and that's of course at a time when almost no one else is trading with Russia. China, on the other hand, is Venezuela's biggest creditor and most certainly has an interest for the country doing well. So what we're seeing in South America right now is not just a regional conflict, but it actually pits the world's superpowers against each other as well.
All right, we'll keep tracking that story, but what are investors looking at in today's markets in Europe?
Well, staying with oil, crude is up on Monday, that as the US is purchasing to fill up its strategic reserves. Other than that, shares are having a pretty good start as well. Asian markets were up after last week's 20-month high on Wall Street. Now, this week, there's a lot of data coming again from the US, including the Fed's final interest rate decision for this year. And we've seen for years, of course, that discussion over interest rate policy usually tops everything else. So we're all focused on that particular decision for now.
Yep, all eyes on the U.S. Fed. What's going to happen with the last meeting for 2023. Thank you so much, Lars Holter from Berlin. Thank you. All right, let's take a look at what's happening in Asia now. See, China's stocks reverse course to rise today after data showing persistent deflationary pressures from weak domestic demand and pushed them lower early in the session. Japan stocks jumped on growing bet that its central bank might not hike interest rates next week. We see Nikkei is up 1.50%. The Kospi, that's up 0.30%. But on the flip side, we see the HSI index down 0.81%. Other markets we track in Asia, we see Shanghai Composite 0.74% up. And we see the ASX 200 in Australia marginally up 0.06%. All right, we'll take a break now. When we come back, more stories from the African continent. Do stay with us. This is Business Incorporated. All right, so our next conversation. Well, Fed Chair Jerome Powell is expected to reiterate his commitment to lowering inflation in his press conference. That's for Wednesday. That's the last rate setting meeting for 2023. Let's get a sense of what to expect. Joining us now is Gilbert Jokpata, financial market analyst. Great to have you on the show, Gilbert.
Yeah, great to be here. Good afternoon, Mr. Ladi.
Fantastic. I know you keep tabs on the U.S. Markets, but how much volatility should we expect this week as U.S. Fed will have its last rate-setting meeting for 2023? Do you think the U.S. Fed, how do you think they've done, when it comes to bringing down inflation?
Okay, first of all, I think it's easy to gauge in what the Fed share will do next, or even sentiments in the market, because we have enough data out there. First of all, the Feds were left with an inflation as high as 9%, which is the highest that have been seen in about 40 years. And they have brought inflation down to about 3% with the last CPI numbers. And we also have enough data. I believe there's enough data for us to price in what we should expect. And in terms of sentiments in the market, we also have the PCE number came out at about 3%. We also had a job number claim, increased that to over about 199,000. And these are all strong numbers in regards to inflation coming down from about 3%, from about 9% to 3%. This actually shows that the Feds are actually winning the war against inflation. But then what should we really expect coming tomorrow? So far, there is enough data out there for us to anticipate what we should expect tomorrow in regards to inflation numbers. And why most persons are thinking, because of the new job claims and increase, which was quite strong, the PCI number as well, that we are going to see. Most persons think the Feds are done with increasing interest rates. But I actually think this is not really the case, since the Fed have reiterated over and over and over that they will do anything that they can to keep bring inflation down to 2%. So I think what we should be looking at more as we move into the Fed meeting tomorrow, it's more of, I think the rates will be left unchanged. Yes, there'll be increase, but more of rates being left unchanged. And why I think that if we are not seeing rates being left unchanged, we should rather have lower numbers. But obviously, the Feds are right now done with aggressive rate hikes so far.
Looking at the inflation rate right now, the Fed, is winning at this point. So going into 2024, do you still see the rates trending, the inflation rates trending downward into 2024?
Moving into 2024, I'm really looking at two things. First of all, the Feds may have to keep rates steady. And for us to be sure this will happen, we need to look at the CPI numbers. If the CPI numbers is not declining more than what we have right now, we will see the Feds hold rates steady for a while. But once we start seeing numbers going down, inflation numbers lower than 3%, then obviously we'll start having rate cuts. The rate cuts will really come in, and I think it's high time the Feds really start thinking about rate cuts. But for us to be sure about this, we have to look at inflation numbers. And so far, there's enough numbers out there for us to know that moving into 2024, yes, I still expect a couple of interest rate hike, but we should be seeing lower numbers as we move in 2024.
Right, Gilbert, for me, I feel like I'm so used to rate hikes at this point. It'd be quite interesting seeing rate cuts at some point, but I'm definitely going to be looking out for that. But let's look at the crypto market now. We're seeing, Bitcoin has done pretty well, in 2023. What are you seeing when it comes to reactions now to the last meeting, the last Fed meeting for this year? Do you see a lot of volatility coming for the crypto market, or do you see Bitcoin falling from over $40,000 down?
Okay, first of all, crypto was first of all the first incidental victim of the aggressive rate hike, which began by the Feds. And crypto also stood very greatly to benefit from less aggressive rate hike, which made macroeconomics being friendly for crypto. And then we saw a major rally from the $24,000 to 30K. We got another rally from 30K to about 37, 38. And then another major breakout that took us to about $45,000 so far. But if you notice the kind of race that Bitcoin has taken, Bitcoin is due to relax. If you're running a sprint, it takes more energy. after you run for a while, it's about time you take a rest. So Bitcoin has done a major run, and the 47K was a major resistance for Bitcoin, and finally it's taking a rest. Moving into the meeting which will be taking place tomorrow, there is one thing I know. It doesn't matter what price action or market structure of Bitcoin will tell us. A strengthening dollar is not a friend to the cryptocurrency market. So if we see rates being left unchanged, the market may just react just slightly, very, very slightly bearish. Probably we may break below 40K, but then I still think the market structure for Bitcoin is very, very strong and can withstand a moderate rate hike or leaving rate unchanged.
Yeah, definitely consensus might be unchanged at this point for the U.S. Last rate hike for the year or last rate setting meeting. So we'll see if it's going to be unchanged. Thank you so much, Gilbert Rapata, financial market analyst. Thank you.
Yeah, thanks for having me, Mr. Ladi.
All right, let's take a look at other stories now. We see South Africa's fourth quarter consumer confidence fell to the lowest in 2 decades for the festive season. That's according to a survey released earlier. This country struggles with higher interest rates and a cost of living crisis. The Consumer Confidence Index, sponsored by the First National Bank and compiled by the Bureau of Economic Research, fell to minus 17 points from minus 16 points in the third quarter of 2023. Taking on to Kenya now, see the average cost of cooking gas in Kenya shot back to levels that prompted the Ruto administration to scrap the 8% value-added tax, and a bit to lower prices and raise use in line with Kenya's policy to transition to clean energy. Households paid about 3,000 Kenyan shillings on average to refill a 13-kilogram liquefied petroleum gas cylinder in November. The latest official data shows near the 3,000 Kenyan shillings level in June when the 8% VAT was last applied. So we're seeing prices rising back to those levels in Kenya. And Ethiopia is set to join Zambia and Ghana as a sovereign defaulter, with an interest payment falling due to its bondholders today. That's and the state says it won't meet that going forward, but we're definitely looking out for if they can actually make those payments. The government last week held what it referred to as a restricted discussion with some of the holders of its $1 billion Eurobonds. According to the Finance Ministry, Ethiopia is seeking to renegotiate its obligations through the Group of 20's Common Framework, which has started to gain momentum after progress in restructuring by Zambia and Ghana. Nigeria has a wide array of opportunities to achieve its target under the Africa Continental Free Trade Agreement. A member of the National Action Committee of the AFCFTA, Professor Jonathan Aremu, made this known earlier today on Business Morning, listed some of the areas in which these can be achieved. Take a listen.
Free trade area. We are already trading with African countries. African Continental Free Trade Area will create for greater opportunity to do that. Not only in trading in goods, but trading services. Look, under trading in services, you can trade under Mode 1. Mode 1 means that you can sit in Nigeria and export your service to any African countries and collect money. I mean, as a professor in my university, right, I can export my education to any countries in African country, and I'll be paid without me traveling, without those who come in here. Secondly, people can come to my university to come and actually take some lecture, to come and take training, and then I'll be paid, which is Mode 2. Mode 3, my university have opportunity to even set up campus outside the country. That's Mode 3, that's a commercial establishment, right? Then Mode 4, temporary staff of my university can go and supply services. So apart from the goods which everybody is familiar with under ECOWAS trade liberalization scheme, services is now also being open for us. So it's a great opportunity. And let me say this, and I'm quoting the President Tinubu, when he was talking to us at Nigeria Economic Summit Group, Summit, that trading services account for over 53% of our GDP. We have a very serious comparative advantage. So also, our products, in terms of manufacturing, we have been doing well. Our products are found in quite a lot of African countries. So the opportunity is now very big for Nigeria.
That was Professor Arimo earlier on Business Morning today. So that's the show. Thank you for watching. Don't forget you can watch us again on our YouTube channel. So also get updates on www.channelstv.com. From me and the team right here at Lagos HQ, it's bye for now.